Well, Palantir just had one of its best quarters of all time. It beat on every possible metric. Its revenue was better than expected, earnings per share was higher than expected, and it gave great guidance for the rest of 2024. And yet the stock was down heavy right after earnings came out. And of course, the big question here is what the hell is going on? Why did Palantir had such a great quarter and it still dropped like a stone? What just happened here? Now, in this video, I'll do a few things. Number one, I'll explain to you what exactly happened, what led to this. But more importantly, I'm going to show you why this is probably one of the best quarters Palantir has ever put out, and why this earnings call made me more bullish about Palantir than I have ever been. And trust me, I have been quite bullish before this earnings call. So this is very impressive stuff. So let's start first of all with what happened here. Now, you have to think about crowd psychology. Think back to what happened with Tesla. Everybody were convinced that Tesla is going to have absolutely horrendous earnings. And the stock sold off like crazy leading up to the earnings. Everybody was saying, hey, I'm going to wait for the stock to crash. Once it crashes, I'll buy back right after earnings. At least the bulls. What ended up happening is this rubber band effect, where everybody were convinced something is so horrible, so horrific. The minute the earnings came out from Tesla, and they were not the worst the world has ever seen, it wasn't the end of Tesla. That spring got released, and Tesla flew up and then corrected back, but generally flew up like crazy. Now, that happened because the expectations were so horrible that no matter what Tesla put out, basically, it meant that the stock would go up. Now, very similar to this, Palantir did the same thing from the other side. Everybody were so convinced that Palantir will have such great earnings. It will blow everybody out of the water, which they did. But because the level of expectation for the stock, for the earnings was so high, Palantir literally needed to come out and beat like nobody has ever beat before to meet that expectation level. The stock increased by 8% in a single day leading up to the earnings. It did 20% of the past 2 weeks leading up to the earnings. So that lead up, that build up, that 20% increase we've seen in Palantir stock just before earnings, that was a setup that was very hard for Palantir to meet. The minute the earnings came out, and it was just a normal beat, it was well below the threshold of what the market has already priced in. And then it started correcting, and then the avalanche started because once it starts selling off, there's a lot of algorithmic trading, especially in after hours, and then you saw the avalanche come down. That's the gist of it. That's what happened with Palantir. Does it matter to me as a long-term investor? Should it matter to you as a long-term investor? Not at all. I mean, it's pretty much irrelevant. It's a fart in the wind. Who cares? But it does matter to a lot of people who are unsure about this company, who are unsure about its potential. And that's why I'm here to explain to you. And I've said this during the earnings call. We had a beautiful live stream, almost 3 hours, phenomenal guests. And I want to thank everybody who came on the live stream. And one of the things I've said is that my bottom for this company, my floor for the next 5 years is Salesforce. So I see this at the very minimum, about $250 billion market cap, which is basically 5x from where they are right now. At the top, I see this as a Microsoft equivalent, which is easily 20x from this point on. So you see that I'm not bothered by this. And in fact, I'm quite interested in this stock price. If it keeps dropping, I'm just going to be more excited. I'm going to be DCAing even harder, which is something that I've never used before. Harder DCAing. That might need to go on a t-shirt. But you get what I'm saying here. Now, as far as the quarter itself, I mean, when we look at the numbers, I can't help but just being absolutely impressed by what they've done, especially in this climate, in this economy, in this environment, with this geopolitics. Look, let's look over the numbers here. And I'll start from the bottom and work my way to the top. So one of the things that I was so critical of Palantir over the past few quarters is the decline in the net dollar retention. In a SaaS business, in a software as a software business, it's very important to have recurring revenue, right? Not only recurring revenue, but increasing recurring revenue. And the way you measure this is with net dollar retention. That's a very tricky metric, but it's super important for Palantir. Essentially, Palantir came into this call with a net dollar retention of 108%, which means that they have built all their clients on average 100% from what they've paid last year and 8% above that. That's not bad, but it's definitely not as good as some of the other SaaS superstars out there, like Snowflake. Now, this 110% we got is an improvement, especially when the 108% was already an improvement from the previous quarter. So Palantir is now improving the net dollar retention 2 quarters in a row. Now, I definitely want to see this going into 120%, which is where I think Palantir should be. And that trajectory really, really makes me confident about what they're doing. The other thing I like here is the fact that we have 9% growth year over year for the top 20 customers of Palantir. Now, 9% growth year over year, that doesn't sound exciting. Who cares? Well, hold on a second. You'll care in a second. You see, the top 20 clients of Palantir, they generate a lot of criticism for the company because of, concentration, right? If the top 20 clients basically are half your business, you have a risk, right? It's a concentration risk, client concentration risk. But the flip side of this is when those top 20 customers that generate almost half of your business have increased their spend by 9% per client year over year, that means that everybody's paying on average $55 million per year from those 20 customers, which means that the thoroughbreds, the clients that they care about, they're increasing their spending every single year. And if you go back through the earnings, that 9% number is always there. Their top 20 customers consistently pay more every single year and they don't leave. Now, the other thing that blew me away was the net income. Net income for Palantir, get this, is up 450% from $19.5 million to $106 million. That is absolutely insane. From 19.5 to 106. That is a wild increase in efficiency, in scalability, in profitability. On the one hand, we have revenue growth of 21%. On the other hand, our COGS, cost of goods, is only growing by 8%, and the entire operating expenses are only growing at 6%. So if you can give me a company that's growing revenues by 21%, but only growing operating expenses by 6%, that company is growing faster and faster. It's faster. It's expanding. It's not only getting better, it's getting better twice. It's a double dip. Now, even if you look at the balance sheet, which we all know is beautiful for Palantir, they have $4 billion in cash, no debt. But even there, they find places to get better. Assets up 7% year over year. Liabilities down 7%. Again, a company that's increasing its assets, decreasing liabilities at the same time. Usually, these things don't happen. You usually don't see this where $4 billion, no debt, more assets than liabilities, 4 times more, 3 times more, and the gap is expanding. It's absolutely insane. Now, even if you look at data like revenue per employee, which a lot of people are really not that excited about, but I think it's a really good gauge of how good Palantir is. Palantir is currently generating about $700,000 revenue per employee. That is insane. It's not as good as Microsoft or Google or Meta, which are probably towards the, $1 million, give or take, but it's in the upper echelon of companies. They're definitely in the league of the top tier companies in the world. If you compare that to Snowflake, for example, Snowflake generates about $500,000 per employee with 113 price to earnings on a forward basis versus Palantir's 58, which we'll talk about in a second, and a negative net income versus Palantir's positive net income, and with the same amount of revenue of $2.8 billion per year. So not to hate on Snowflake, but I'm saying it's a good benchmark to show you how good Palantir is at profitability, scalability. Now, if I already mentioned this, I'm going to kind of move on from this point and I'm going to talk about PE. Everybody criticizes Palantir for having a very high price to earnings. And I've been saying this for the past year. I've been saying, look, guys, the PE that you're seeing on Palantir right now, that's the first PE, the second PE. They just turned the profit. They just turned the corner. So they're essentially just basically broke even. So it's not really the good comparable. Right now, this is the evidence I've been talking to you about. Look, the PE was 200 just a year ago. It's currently forward PE of 58. Not saying that 58 is low, but 58 versus 200 in a year just shows that closing their gap. Palantir is slowly growing into their valuation, the same way Tesla did, the same way all great companies do. You know that saying? Time is the best friend of a great business. And that's specifically true for the stock market and for multiples. That 58 forward PE, Palantir doesn't have an exuberant, crazy PE anymore. So another FUD gone out the window. Right now, we're talking about a company that generates 21% revenue growth. But that revenue growth is just the tip of the iceberg you can see. The potential of the revenue growth, the one that's in the pipeline, is a lot bigger. And I'll show you. Look, we have about 40% of US commercial growth year over year, 14% quarter over quarter. We have 70% US commercial customer growth year over year. Those numbers are baked into the cycle of Palantir, but they've not yet translated to revenue growth. There's a lag. There's a life cycle of a customer onboarding. And it's not the only place where you can see this. Look at the US commercial remaining deal value. It's up 74%. Look at the total contract value. It's up 131%. This lag will eventually close and will increase the revenues out of the 21 region into the 30s. That's inevitable. Because Palantir at this price, at this stage, it's still a very early stage company. People tend to think about Palantir, this massive 20-year behemoth. You have to remember that the commercial stuff of Palantir just started in 2017. When you think of Palantir, think about commercial versus government, completely different businesses. This is a young company. This is you getting in on the ground level. It's not cheap. There's a lot of growth and success baked into this price. But so far, over the past 5 quarters, they've done nothing but execute and deliver. And they've definitely gotten my trust.